Aloha and welcome to Java. Thank you kindly for joining me. This is for Sunday, the week ahead, March 10th, 2024. Sorry getting this out a bit late. There's quite a bit to go over, and I think I'm still recovering just slightly from jet lag. So happy Sunday, everybody. I hope you're having a good weekend. And let's start getting into what there is because it's quite a bit. So with the MMRI, our risk indicator, is staying relatively stable. So this is based on the 10-year yield versus the relative strength of the dollar. And we had an interesting dynamic happen on Friday to where the two didn't quite move together. So we've got the dollar relative strength, though, is weakening. As that does, it's going to give room for the stocks to recover. So this coming week is pretty interesting. Closed down on Friday. There's quite a bit of volatility, but the market greed index is still high. So this is what's driving the market still. So stocks probably have a recovery on Monday, but we've got quite a few things going on. So let's start with that. The short-term bank funding program that the Fed has is going to end on Monday. So these were the loans that kind of are baking liquidity into the system and allowing the smaller banks to take advantage of arbitrage. So getting these loans at lower rates and lending them out on the long term for longer rates. So this is going to have an interesting effect and really need to watch the MMRI yields and the dollar strength on Monday for a clue on what is going to happen in the equities stock markets. So in the calendar, we don't have much as far as reports on Monday. This is going to be quite enough to watch. We will be getting later in the week the core CPI for inflation. 10-year note auction happens on Tuesday for treasuries, and then on Wednesday, the 30-year. We'll be watching these closely because, as we were speaking about last Wednesday, when a lot of the mid-sized banks were talking about relabeling these on their risk factor because they don't want to purchase these any longer if they're not going to be relabeled for them. So if they're not buyers of these notes, we're going to watch who is the buyers and how the sales go. Friday, we'll be getting Thursday and Friday more initial jobless claims and the PPI as we do every week. However, I would like to discuss a little bit about what happened with Friday and the job information that we got last week. So more and more people are beginning to wake up and they're questioning the BLS jobs data. So BLS stands for Bureau of Labor Statistics. This is direct from the government and the numbers that they are using when they put them out. So we already spoke about how they put these numbers out and then they revise them down after they get the effect that they want in the markets. If you're new here, I hope you stay through this because it's very important going forward and will affect everybody's finances very quickly here. So this jobs data is what they're saying they're going by to as one of their data points for the rate cuts. So why are they not believing this data? Because every time they're bringing it out, they do revise it down in large sums. We're talking 25, 30%. Not only that, but what they're counting into the data, I think, is just as important. So this is very similar to how they calculate inflation. If they see one segment going way off the charts, they just eliminate that from their pool of what they count. So the same way that we measure inflation today is not the same as it used to be measured 15 or even 20 years ago, which is not that long. So it skews the numbers. So we've got this one. More importantly, what is included with this, we've got people figuring this out. So this comparison for the jobs is a comparison of basically native-born Americans versus foreign-born, which is immigrants, whether they're legal or not. So slight different angle, but it's very eye-opening. So 1.2 million gained a job that were foreign-born. Meanwhile, 500,000 native-born Americans in the same time period lost jobs. So what does this say to me? There is probably large discrepancy in the amount they're paid. This is also how they skew the numbers, is they count uh, 2 part-time jobs versus 1 full-time job. So they count the numbers, that would be 2 jobs, and count it as a gain, even though it's the same number of hours. My large part of difference with this is that they are not separating out public sector versus private sector, because I think that graph is also very important. It takes roughly 4 private sector jobs to count for every public worker that's a government job. Government jobs don't make money. They're paid for with your taxes. And so over 25% of the growth was government jobs. That means higher taxes, higher inflation. So this accounts for why we see conflicting headlines. Jobless numbers going up. Right here, jobless rate hits 2-year high, and yet they're saying more jobs are being created because it doesn't equal out unless you account for those. Basically, they're duplicating jobs, padding their numbers. That's how they're doing. We've got Canada, their public sector hiring. It's driving the labor market, same thing, the government jobs. It's not any private sector. Private businesses, small, medium businesses are getting wiped out. So we've got DHL. If you're not familiar with who they are basically a shipping company, very similar to UPS or FedEx. So they're saying the near-term economic outlook is not so bright. Shipping companies are a leading indicator. So along with this, had another shipping company. They announced that they are going into liquidation, Chapter 7 bankruptcy. So losing another major trucking company, along with DHL saying it's not so good. We've got another brewery filing Chapter 11. These headlines are coming out more and more, and we're going to see more of this. So, trouble appearing on the horizon for the US economy. Institute of Supply Management is basically saying that their purchasing managers index, the PMI, which is what we watch, is really coming out and showing that there's weakness in the overall economy in reality. So we've got the stock market continuing to go up, which I think is more an indicator of inflation. People don't know where to put their money. They've got to put it somewhere, throwing it into the stock market and basically gambling, which never ends well. So moving to housing, in Florida in particular, but this is kind of representative of many areas, condo owners stuck in a train wreck is what they're saying as prices are dropping. And this is because what we've been speaking about, insurance and property taxes, are outweighing the price of the home. So it's not just mortgage rates, but property taxes and insurance are making it no longer viable to own down in Florida. So forcing people to sell, increasing supply, decreasing demand is going to cause an issue. And as it says here, the market is caught in a storm. So it's a very kind way to put it. Okay, so we've got another Bank of America report talking about the record tech sell-off by investors. So just some short numbers, what they did in this report is basically what happened over this past week. The largest outflow ever recorded, $4.4 billion out of tech stocks alone, ending March 6th, which was last week. So, largest outflow ever recorded, still in greed territory. The money is shifting, it's just moving. So, with this, wanted to go over something because we've been talking about the banks. Monday is the start of what I think is a longer continued decline in the banking system. Many more about to fail. Jerome Powell and Janet Yellen both admitted to this last week, and they're going to not only allow this to happen, they are actually fanning flames, so to speak. Why are they doing this? We've got Old Glory Bank. So, blasting the federal government's intrusion into personal banking transactions. What was going on here? Basically, the Treasury Department, their Financial Crimes Enforcement Network, so this government, were basically telling banks to scan any transactions that had any purchases with either MAGA or Trump or faith-based books in the transactions. They want to know so that they can label them as possible extremists or domestic terrorists, basically. So that's way too much digging into personal transactions. Got a couple of lava updates. So one of the things that was said in the State of the Union, it was not going to get political, but he was talking about sending 1,000 troops, deploying them to build an offshore port for Gaza aid. But what I want to bring out for this is they're saying that this will be up and running in the next 60 days. So they are admitting out front it's going to take 2 months before it's functional, but they need the humanitarian aid now. Sending 1,000 troops, saying there's not going to be any boots on the ground there when we've already got people there and we know this. It's why would they build this? That does not fit the narrative. So, at any rate, I'm going to leave that with you to think about. Might bring some of this up later. We've also got Central Command talking about bringing more drone countering lasers for the Middle East. So, these are expensive weapons. However, they do want to order more of these. I've still got people telling me that it's conspiracy theory and these don't exist. Directed energy weapons are due. They do exist. They're calling this system Laser Weapon System, or LAWS. So this is it right here. And they want to order more. And this is just a reminder. We had a little bit of an update. Don't have an article for you, but BRICS making a bit of progress is what was reported on their backlying, basically cryptocurrency that they're going to be using as their backbone, and that they're creating the system that it will run on, similar to SWIFT or the FedNow payment system. So with that, thank you kindly. If you don't mind giving the video a like, helps it along quite a bit. I know this was a long one, so until I see you again, my friends, stay free.